In less than 2 days, a new tax system is going to be taking effect in Nigeria. New tax laws and a revamped authority will come into place, which is going to affect each and every Nigerian citizen, from students to workers to small business owners to online creators and even multinationals. But contrary to popular opinion, the new tax reform is not here to make life difficult for anyone. For decades, paying taxes in Nigeria has been a headache for most people. Individuals and businesses have grown concurrently, multiple taxation, confusing compliance, lack of transparency, and even worse, a lack of basic understanding of the tax system itself. Something needed to be done. So in 2025, the Presidential Fiscal Policy and Tax Reforms Committee introduced a bold restructuring of Nigeria's tax ecosystem to offer clarity and tackle these issues. So the question now is, what are these tax reforms and how are they going to affect you and I in our day-to-day activities going forward? Hi, my name is Silayo, and in this video, let's break down everything important you need to know about the new tax reform and how to position yourself in 2026. First of all, we need to understand what the new tax reform is all about. The new tax reform consists of 4 different acts: the Nigeria Tax Act, the Nigeria Tax Administration Act, the Nigeria Revenue Service Act, and the Joint Revenue Board of Nigeria. The Nigerian Tax Act is a kind of guidebook for Nigerian taxes. With the new tax reform, the old confusing tax laws have been analyzed, repealed where necessary, updated, and reformed as a single unified law, which clearly defines what taxes exist, who pays what, and how much to pay. The Nigerian Tax Administration Act, on the other hand, explains everything on how taxes are collected, from taxpayer registration to filing procedures to record keeping and to VAT collection. The Nigerian Revenue Service Act is a law that officially establishes the Nigerian Revenue Service, which replaces the Federal Inland Revenue Service, commonly known as the FIRS. This new body is designed to eliminate overlapping dues, modernize tax collection using automation, ensure compliance for individuals and businesses, and improve nationwide coordination with tax authorities. Finally, the Joint Revenue Board of Nigeria. This is a body that starts with harmonizing and coordinating revenue administration across all 3 tiers of government. So now that we understand what the new tax reform is, let's dive into each of the laws and see how they affect the citizens and their income. Let's begin with personal income tax. Personal income tax includes all money earned within a year from economic activities. It could be dividends, salaries, rental income, and much more. Now, this table shows the revised personal income tax brackets that will take effect from January 1st, 2026. We can see that an individual who earns 800,000 naira per annum receives a 0% tax rate, which essentially means that an individual who earns less than 70,000 naira every month, which is minimum wage, is subject to 0% tax rates. The next 2.2 million naira is subject to a 15% tax rate, and this goes on and on onto the highest tax bracket rate, which is for an earner who earns 50 million naira per annum and is subject to tax rate of 25%. Let's use an example of a middle-class worker named Ade, who earns 500,000 naira monthly or 6 million naira annual income. Since Ade makes 6 million naira per year, the first 800,000 naira out of the 6 million naira would be tax-free, which leaves Ade with a taxable income of 5.2 billion naira. The next 2.2 million naira receives a 50% tax, which is 330,000 naira in taxes, leaving Ade with a 3 million naira taxable income. The leftover then receives an 80% tax rate, which then translates into 540,000 naira in taxes, and a sum total of 870,000 naira to pay. If we were to analyze Ade's income with the current tax rates, Ade would have been paying over 1.2 million naira in taxes. But with the new reform, Nigerians are said to pay less taxes and have more disposable income to provide for their basic needs come 2026. Now, there are certain categories of people in Nigeria that are worth talking about when it comes to personal income tax: students and retirees. If a student or a retiree is still running an income-generating business, he or she is still liable to the 2026 Personal Income Tax laws. Next up, we have company income tax, also known as corporate income tax. Now, this is simply a tax that is imposed on the profits of corporations. The new tax reform has a standard rate of 30% on companies' profits and a development levy of 4%. However, there are exceptions. Companies with 100 billion naira or less in annual gross turnover and fixed assets not exceeding 250 million naira are exempt on company income tax. These include SMEs, which are small and medium enterprises, and non-resident companies. Another important tax for us to take note of is the value added tax, or the VAT. This tax affects each and every single Nigerian citizen, as we are all consumers of goods and services in one way or the other. Now, in the coming tax reform in 2026, the value added tax rate still remains at 7.5% for all goods and services. However, there are exemptions. These include agricultural products, healthcare products, petroleum products, educational services, transportation, and housing. All these have zero rated VAT. This has two meanings. First of all, the buyer of the goods and services in these categories will incur no VAT. Secondly, the seller who may have incurred VAT while purchasing these goods and services is entitled to an input VAT refund by the government. These are the basic needs of the everyday Nigerian citizen, and the new tax reform is committed to making these goods and services affordable for the average Nigerian citizen. These are the most important taxes that affect the everyday Nigerian citizen. So the next important question is, what do you do as a person to position yourself in 2026? The new tax reform is heavily inclined to self-assessment model, where every citizen is expected to declare his or her income honestly and be taxed accordingly. So for you and I, this is as simple as writing proper narrations when making transfers, and also having proper records of remittances, gifts, and loans, which are not expected to be taxed by the government. Remember, the new tax reform is not here to make life harder for anyone. Instead, it's here to help low and middle income earners breathe easy on tax amounts and align those who earn more to pay more, so the economy can function properly. I hope this video was helpful and educative. Thank you for watching, and see you in 2026.